right, everyone. Happy Friday. Thank you all so much for coming. Many of you I've had some interaction with in the past, but if you don't know me, my name is Nathan. I run Foundersuite. You all are users and customers, so you know what we do. But we've been at it for about 4 or 5 years now, and our customers have raised over $2 billion, which is something I'm super proud of. Before launching Foundersuite, though, I spent about 12 years running a consulting firm called Venture Archetypes that was helping startups raise capital. And before that, I was in investment banking, helping companies raise capital. So I've basically done nothing else in my life other than help companies raise capital. So this talk is basically everything I've learned from, 12 plus years of raising money. First off is how not to do it. A lot of founders, when they decide it's time to go raise money, is they just say, all right, let's ask everyone we know. Chris, I will record this, yes. They just start asking everyone they know if they can make introductions to investors. And that's a logical approach, but it's actually a little bit flawed. Hunter Walk is a VC here in San Francisco, and I just love this response. Will you introduce me to investors is too broad a question to be acted upon. It's also putting the burden of figuring out who you should be targeting on the person you're asking for introductions. And really, those are two separate functions. When I was consulting to startups would hire me to do this work and hire me to put together a list of target investors, and I would easily put in 50 to 100 hours of research. And that's just what it takes, right? So this is a little bit too ambiguous, too unfocused a way of fundraising. So instead of doing it like this, I'm going to show you a better way, which is really to think about fundraising as a sales process, right? If you've ever been in B2B sales, it follows a pretty straightforward approach. You build a list of leads or prospects, you qualify those leads, you engage with them, and ultimately you're driving all of those leads towards a yes or no, towards a close. And we can kind of expand on this, in thinking of fundraising as a sales funnel, right? It's a lot like sales with a few little differences here and there. But of course, step one is building this initial large target list of potential investors, prospects, or leads. Then screening, filtering, and qualifying that list. And then, step three is where it differs a little bit from sales. Fundraising is so much about, actually the next two are where it differs. Fundraising, you don't just pitch a benchmark capital. You've got to find the right partner or person, as your kind of qualified lead. And then fundraising is different from sales in that so much of it is driven by the warm introduction, which we're going to talk about how to build those. Those introductions lead to pitch meetings. Of course, you're going to be crushing those pitch meetings. So you'll be advancing into due diligence and term sheet negotiation. If you haven't ever been through due diligence, it's basically a deep dive into your business. When I raised our round for Foundersuite, I got a term sheet from a VC on a Friday. I was so excited. On Monday, they sent me their due diligence list, and it was about 150 items they needed, from articles of incorporation to customer references to, where'd it go? Sorry, articles, customer references, even access to our Google Analytics and things like that. Personal references, that's all part of due diligence. And then ultimately you get through due diligence, ultimately you're selling shares of your company. So really fundraising just is another sales process. And if we break it into these step-by-step approaches, I find that it takes away a lot of the anxiety and frustration that a lot of founders have with this. So step one is building your funnel. Especially if you're at the pre-seed or seed round, it's really a numbers game. I always tell founders you need at least 100 to 200 target investors in the top of your funnel. And the reason is you're going to be getting rejected almost all the time. Again, back to when I was fundraising for Foundersuite, I pitched over 200 investors, and I ended up with 1 seed VC and 10 angels coming in on my round. And so you can do that math. That's about a 5% conversion rate. That also means I'm getting rejected 95% of the time. And granted, I have been raising capital for 10, 12 plus years, right? So, and I've had this statistic corroborated with quite a few other sources that a 5 to 6% hit rate is actually pretty accurate. So, you know, sometimes that's a shock to people. If you've been successful in other areas of your life, you get into fundraising and you're just getting rejected almost constantly. That's pretty normal. Now, this is like my standard slide. I'm going to talk about, you know, today in this market environment, one piece of advice I'm telling founders: how do you counteract this really turbulent market? You increase the size of your funnel by 50 to 100%. So if previously you were aiming for 200 investors on your target list, now you got to dial it up to 300. And we'll talk more about, you know, fundraising in a COVID market, but really that's one lever that is under your control, right? And it takes work, it takes research, it takes time. As a rough rule of thumb, it takes roughly like 20 minutes to 30 minutes of research, you know, for each investor. I've just found that is often the case. All right, so let's keep moving. Where do you build this funnel? There are multiple places to build your funnel. One is AngelList, great place to start. There's around 35,000 investors on AngelList, and you can search by type, industry, and then some of the things I like about it is you can search by school or company. So, you know, find the angels that went to the same college that you went to. That could be a great icebreaker. Or if you worked at, you know, IBM or Google or something, find angels that, you know, also work there. It skews towards angels, but it does have a lot of VCs on there as well. Foundersuite. We have a database of investors, as most of you probably know. We've got about 41,000 funds, which include venture capital, strategic investors, family offices, fund of funds, even some private equity, and about 100,000 angels. You can search by name of the person or fund, by type, and type would be, you know, VC, strategic, angel, accelerator, stuff like that. Industry, so we've got most of these investors tagged by industry. So just start typing the first couple letters of your industry. And to expand your search, you know, if you're in healthcare, there might be healthcare tech, healthcare, just healthcare IT. There could be a couple of variations of tags, so just choose all of them. Also try searching on like specific ones. I was working with one of our customers the other day. He was in healthcare, and as we talked more, we realized he was really in like cancer development. So we looked for oncology and found like 600 investors in that. Or you can search by location. And location, I would probably start to search by your city. Like London, I know we've got about 7,000. San Francisco is going to be a lot. New York's a lot. Smaller places might not be as much, but we have it pretty well covered. And you can also try searching by country, but mostly it's tagged by city. So that's Foundersuite. And what we've done is basically collect a little description, contact information, email if we can find it, social links. So typically, you know, the way I'll actually use this is maybe search by SaaS, scroll down here, anyone who kind of catches my eye, I'll open up their LinkedIn page, their Twitter page, their website, do another 15, 20 minutes of research on them, looking at their portfolio of companies, and if they look good, I add them to my target list. They do not get notified. This is simply a way, it's like a white pages, a way to help build your target list. CrunchBase is another pretty useful resource in building your funnel. The way I like to use CrunchBase is I make a list of 10 or 12 companies that are similar, but not directly competitive to Foundersuite, and I look them up one by one, and I see who funded them at the relevant stage I'm at. You can also just do general searches on CrunchBase. I don't find it super intuitive, but you know, that could be just me. Also, if you have an investor already, you can plug them into CrunchBase and see who funded them at the relevant stage. Let me start that over. If you have an investor, you can also plug them into CrunchBase and see who they co-invest with. And so that can be kind of useful. Lots and lots of places to build your funnel. PE Hub, Inside Venture, Venture Pulse, Strictly VC, these are newsletters that you can subscribe to. And I kind of skim them every morning with my coffee for 10 minutes. And basically when a startup raises a new round, they announce it in here, or when a venture fund is formed or raises a new fund, they announce it in here. So it's kind of interesting to see who's getting funded and also, what new VC funds are out there. The best VC fund to be pitching is one that just raised a new fund. The typical life cycle of a VC is they raise a fund, they put about half of it to work up front, and then they save half, to do follow-on deals to backing their winners. So, when they first raise a fund, there's a lot of activity with that VC. They're pretty active. Conferences can be good if you're in a niche space like cannabis or blockchain. Get out there and look at the speaker list. It's almost funny because conferences have all stopped now, but still you can go back and look at previous conferences in your space and see who is speaking. A lot of VCs and investors love to build their own brand by getting out there and speaking. Quora, TechCrunch, Medium, you're probably all familiar with these. Quora is kind of interesting. People have put a lot of time into like building lists, like who are the top 10 e-commerce angels, right? PitchBook and CB Insights, these are paid databases, very deep data. I've used PitchBook, and you can get data like what was the valuation on a deal, who was the lead investor, who were followers, even like who was the attorney on the deal. Well, really deep data, but these are pretty expensive. PitchBook's about $15,000 a year. CB Insights, I think, is even more than that. But if you have a friend or someone who's got access, great source to be working on that. And last but not least, I'm going to show you 2 ways to mine your own personal network to help build your funnel. So first off, let's go to LinkedIn. I recently switched to a paid plan, but you can do everything I'm going to show you on a free plan as well. So this is my LinkedIn homepage. We're going to just come and do a search on some pretty basic topic like angel investor. So 86,000 results. This is probably the whole, database or the whole category of angel investor within LinkedIn. But obviously that's way too large, right? There's nothing I can do with that. I'm not going to go try and pitch 86,000. So what I'll do is come and apply some filters. I might do a first degree connection just to remind myself who I'm directly connected to. But the hack here is second degree. And then let's just go San Francisco. Okay, well, that's still pretty large results, but it's much more manageable. I might apply another filter. But basically, this is now telling me there's 4,000 people who have the word angel investor in their title, who are in San Francisco Bay Area, that I have at least one mutual connection to, right? So this is still probably a little bit too large of a list, but it's much more manageable. And theoretically, I should be able to get in touch with any of these people because I have some mutual connection. But that doesn't mean all 4,000 of these people are relevant to me. So what I do next is come and command click or right click, and I open up a bunch of people in a new tab, and I open up maybe 50 tabs at a time, and then I just go through and spend 30 seconds or so skimming their bio. Okay, Carbon Black, Proofpoint, VeriSign. This guy, VMware, I mean, these are big like security companies, probably not doing the type of deal, Foundersuite doesn't feel like a fit. So Command W, close him. Jennifer, I just kind of skim and look and see what she's doing. A lot of times people will list who they've invested in. Okay, so she invested in AngelList. That's actually kind of interesting because AngelList is a little bit, I don't know if it's competitive or not, but it's in the same category as Foundersuite. So I would probably add her to my target list. And then I would figure out who my best mutual connection is. All right, Jonathan, Jonathan's probably the strongest connection I have. So I would add her to my funnel, to my investor CRM, of course, and then I would mark down Jonathan as the connector, the person I'm going to be asking to make the introduction. So I just repeat this process, and it's pretty quick. Sometimes you get a little bogged down. You know, this guy, I don't even recognize any of these. It looks like he's kind of a real estate guy. Skip, close. So that's how I mine my own personal network using LinkedIn to build my funnel. Another way is using Foundersuite. So not that one, but this is my funnel. This is just a demo account, and it's kind of messy, but what I want to point out here is this column. If you can read it, it says Steve B. Leads. So Steve Bennett is a real person. He's a professor of finance. And what I did is I came over here, I added a new column. I called it Steve B. Leads. Then I go over into settings and team. And Steve is, I should mention, one of my advisors. So I know this guy, right? I come into settings and team, and I invite him in to my CRM, and I say, hey, Steve, can you, I'm building out my funnel. Can you add some names from your Rolodex, from your network to my funnel? And he did. He added 10 or 15 names to his column. And I repeated this process with 5 or 6 other advisors and generated about 50 or 60 good, strong, solid leads by having a structured way of asking my advisors to open up their network. I didn't just call up Steve and said, hey, Steve, do you know anyone I should talk to? I actually gave him a way to help me build my funnel. And you can do this on the free plan. You can do this on a paid plan. It doesn't cost anything to add team members. So, it's just a structured way of building your funnel. And especially in times like what we're in right now, lean on people, lean on your advisors a little harder, kind of lean in, as they say. Ask for help, ask people to help you out. I think people are in a good mindset right now. People are worried and panicking a little bit, but also I'm seeing a lot of signals of people being very helpful to other founders and startups helping other startups. Okay. Last but not least, once you start to do this, you kind of start to find investors all over the place. So it's going to take 50 to 100 hours, maybe even more. You want to increase your funnel by 50 to 100% what you could have built 2 weeks ago. That's the new reality. I showed you that. So now that we've built this list, we actually want to start removing names off this list, right? It might seem counterintuitive, but what we want to do is start qualifying this list. A good salesperson, the best salespeople, don't just chase every prospect or every target. They qualify them, they prioritize them, they rank them. And that way they're using their time judiciously when they're actually, in sales mode. And we want to do that with investors too. It's even more important with investors because unlike a salesperson, you sell something, you move on. With investors, you're going to be, in bed with these people for the next 5 to 8 years of your life. So you really want to be choosy in who is on your target list. Anyone who's invested in a competitor, just cross them off right away. If they're ethical, they won't want to talk to you. If they're unethical, they'll send your pitch deck to your competitor. I've seen it happen many times. No dry powder. This applies to venture funds. I mentioned the life cycle of a fund. If you're talking to a venture fund that has not raised a new fund in the last 2 or 3 years, they're probably only doing follow-on deals to their existing portfolio companies. And it's easy to waste a lot of time like pitching and chasing these guys when they're not actually really doing new deals. They'll take a meeting with you because they want to know what's going on with the industry, but it's a little bit easy to waste time. It doesn't mean you should not talk to them. They could be great to practice your pitch, but just don't expect to get money out of them too easily. Same with angels. If they haven't done, if you're looking at someone's AngelList page and their last deal is from 2015 or something, they might be taking a break. Wrong sector, wrong stage, wrong geographic location. This stuff should all be obvious. If you're a medical devices company, you would not be pitching a fintech investor and vice versa. Stage, if you're seed stage, don't be pitching $1 billion Series B fund, of course. Wrong geographic location. Usually you can tell just by looking at like a VC's website. They will often say, we invest in Pacific Northwest fintech companies, right? If they have a geographic preference on there and you're not in that location, don't waste your time. Last but not least, bad reputation. Again, like I said, you're going to be in with these investors for years. You want to be choosing wisely. And I've seen founders get fired. Investors can fire you, right? If they control the board and maybe you have a bad quarter or bad 2 quarters or something, and you can get fired. Also, even if you don't get fired, investors can make your life hell. So you want to be a little bit careful. One great way, of course, is reference checking investors by talking to founders they've backed in the past. If you're part of an accelerator, I know Y Combinator has something called Bookface, which is like this private database where people leave comments and reviews on investors. There's also something called thefunded.com, which is put on by Founder Institute, which is kind of like a Yelp. It's a little bit kind of old. I think it launched in like 2006, so it's getting a little bit outdated, but it's like a Yelp for VCs. It's pretty interesting. And we're probably going to build something in that same category as well, so stay tuned for that. So don't skip this step. As a general rule of thumb, you want to be removing about 25 to 30% of that initial list so that what remains is a highly focused, highly targeted list of investors. And this is important, so pay attention now if you've been checking Facebook. Fundraising is all about getting momentum. We're going to talk about momentum more. Momentum drives deals, and it's very hard to get momentum going if you're chasing and pursuing poorly targeted investors, right? So the more time you spend into researching and qualifying your target list and ending up with a really highly focused, relevant list, the faster your fundraising is going to go, the more momentum is going to go. And that's increasingly important in today's environment. So I need to revise this slide deck. I'd say focus here on filtering down more like, 150 to 200 direct targets. Okay, just to keep going here. So now we've got this nice list. Now we need to try and figure out the best way in to each investor on this list. If you're using Foundersuite, hopefully we've got their LinkedIn link. So just click that. It opens up their LinkedIn page, and you can see if you have any mutual connections. If you have more than one mutual connection, good job. You've been a networker. There's a hierarchy of who to ask for the introduction. The best is someone that's made Tim money in the past. Tim will take that introduction all day long. When I was raising capital, my kid was in preschool and we had a dad's night, and I got to know one of the dads, and he had just sold his company for $640 million. He offered to make a few intros for me. Every single investor he introduced me to got back to me within like 20 seconds. It was the most responsive I've ever seen any human being ever been, because he had made money for people. Second best on the list is someone that Tim has co-invested with. This could be another VC he's done deals with, or an angel that feeds him deals. Third best, once again, pay attention here if you're snoozing. Third best is someone that Tim has invested in, a founder that Tim has invested in. We're going to come back to that. Fourth is, what I call the professional connectors. These are the guys and gals who work in biz dev at big accounting firms or big law firms. They'll make introductions for you, or relationship managers at your Silicon Valley bank. Great people. They'll make introductions, but because they make a lot of introductions, sometimes it's not as strong. Fifth on the list is someone that Tim met at a conference 3 years ago, and they connected, but they don't really know each other. If you have zero connections to your target investor, what do? We go back to number 3 on that list, the portfolio company founder. Reach out to 2 or 3 portfolio company founders, ideally ones that have fairly recently raised money, just with a cold email like, hey, I've been following Tim for a while. I know he invested in your company. I would love to hear what it's like working with him. Is he helpful? Is he responsive? You kind of do a little qualifying with that founder, and you get a dialogue going with that founder. They'll often, be willing to make an introduction to Tim for you. And the reason this works is that founder was in your shoes 6 months ago doing this same exact thing, right? So there's an empathy there, and founders are pretty good about helping other founders. And on the flip side, you know, Tim and that founder, there's a level of trust. They went through due diligence, they got to know each other. So it's actually a very strong signal, right? So it takes time. Yes, it takes a decent amount of time. It takes a lot of coffees. It takes a lot of virtual Zoom meetings, right? But that's how this game is played if you want the warm introduction. You know, it's very easy to find Tim's email. So you could just cold email him, but that decreases your odds of getting a meeting by exponentially, frankly. The reason is these investors, you know, Tim is getting 50 to 100 introductions a day from people he trusts. Tim's probably on the high side. He's kind of a celebrity, but still, all these investors are getting tons of intros, and so many of them are filtering by how you get to them, which is why the warm introduction is so important. People don't always like it when I tell this because it's work. It's a lot of work to get those introductions, but it will pay off if you get good, strong, warm intros. Okay, so we've got our list of 200 investors. We've qualified them. We figured out how to reach them. I'm going to show you a few CRM tips. I used to build these spreadsheets for startups, and that's what led to Foundersuite. So I'm just going to show you a couple little tactics. So, you know, this is a super messy funnel, but basically it's structured as a funnel, right? You've got your pitch, contacted, diligence, said no, and I've even added a couple different custom columns for no's. But, you know, basically your job as CEO or CFO is to be moving these cards through the stages of your funnel, right? It's like a horizontal funnel. And I often tell founders, like, actually block off, you know, 4 days a week, couple hours a day on your calendar to just work on your funnel, to work your funnel like a good salesperson. And, you know, you might take your contacted list and say, all right, I've contacted or been introduced to all these guys. What can I do to move them into a pitch meeting? What is John waiting on? And everyone I've pitched, maybe I come in and focus for a couple hours just on the people I've pitched. What can I do to move Ben into diligence, right? And everyone in diligence, what can I do to kind of move that into a commitment or a no? So that's a few things to do. In terms of some of the CRM stuff, I'll show you a few tips. Obviously, you can add notes here. This is kind of nice. If you know, we have a output to your calendar. So, right, you want to set up a meeting with this guy. You can then push that out to your calendar. And then that also gets added to the to-do list and metrics. So that becomes this master list of all your tasks and to-dos. You can upload and attach files. What's the pitch deck you sent him? What's the term sheet you're discussing with him? So that's useful. And then you can, this is maybe my favorite thing, you can integrate your email so that all email conversations get automatically pulled in and threaded in. And this is actually kind of neat. I'll show you one more little hack here. If you're working on this with advisors or your co-founders, this is like advanced level fundraising stuff here, but it's kind of neat. If you're working with, like, say you've got a co-founder and 2 advisors, bring them in to your account, get them to connect their emails, and then you turn on this toggle called share emails across the team. We call this high visibility fundraising. And basically what this means is back on that card, you'll be able to see everyone's conversations with every investor all in one place. So sometimes it's a little scary for people because you might see that conversation that your advisor's having with a certain investor. And, you know, maybe it's not always positive, but it's pretty powerful to do. So I think I've showed you most, you know, I don't want to overload you with a demo here, but you can sort and filter the columns. You can sort and filter your board. If you just want to see like Los Angeles investors, you can do that. So lots of good ways to work your funnel, you know, with the CRM. And I'll just show you this really quick. This is the to-do list. So this is kind of your overall team view of every task and activity you've got to do. And you can see who owns that activity. And you can kind of just see how your fundraising is shaping up, right? Total commitments, total number of new investors added. This is like this is an old demo account, so it's not too, up to date, but you can see like how healthy is your out. How many new investors have you added in the past week? How many new commitments, stuff like that. All right. And of course, if you guys have any questions, reach out as you do. Why even bother with a CRM? Because again, we go back to fundraising as momentum. You've got to get momentum going. That's your number one job, is to get momentum going for your round. And it's very hard to get momentum going if you're running a messy, sloppy process, right? You've got to, the speed of your round is a big factor in whether it's going to get closed or not. And so if things are slipping through the cracks, if you're not following up on, diligence assignments quickly, the round slows down and stalls out and gets stale. I see this happen so many times where the founders get out there, have a lot of energy into it, and then it kind of slows down because they're not running an efficient process. So anyway, that is the whole value prop of using a CRM like Foundersuite. Okay, so we're actually not in this process, we're not talking to investors quite yet. Before we get out there talking to them, just make sure your pitch deck is amazing, that it blows people's socks off. I tell people, make sure you've given your pitch 5 to 10 times to people who will give you honest, hard feedback about your deck. Brutal feedback, right? Because you don't get to go back and do a redo with investors. Investors are looking for reasons to say no. And, probably one of the biggest reasons why a startup doesn't get funded is because they're going out with a crappy pitch deck. So make sure your pitch deck is awesome. If you're a paid Foundersuite subscriber, we do offer a free 30-minute pitch deck review. You can do a live pitch practice or just send us your deck. That's paid subscribers only, but happy to do that. I've done hundreds of them and can usually give some good feedback and advice on your deck. So take advantage of that if you're a paid customer. Also, you should have a financial model. If you're raising $1 million, show me as an investor how you're going to spend that money. How are you going to spend it? Where is it going to get the company? Because I want to see that your CEO material, that you can actually put together a budget and a forecast. So that's pretty important. All right. And then last but not least, oftentimes a good executive summary is also useful as well. Typically, you don't need a business plan anymore. All right. Now, we're just about to open the curtains. Not quite yet. When we're doing that research of figuring out how we're connected to certain investors, a lot of times you'll find that you might have a couple power connectors. These are people who know a lot of people. Jeff is a real person. He works at NASDAQ private markets, so he knows everyone. And I noticed that he was connected to tons of the people on my target list. And so I put together a little email like this. Hey, Jeff, I'm starting to raise around, or I'm raising around. I see that you're connected to a lot of people on my target list. Can you introduce me to any of these people? And he could just respond to this saying, yeah, sure, I know Sean, I know Jessica, I know Wesley, I don't know anyone else. He can just kind of go yes, no, making it really, really easy for him. So for everyone he says, yes, I'm happy to introduce you to, I put together a clean new email thread that looks like this. I'm going to point out a couple of the key features here. One is, notice how short this is. I'm not putting together or let me step back. One common reason or mistake that I see a lot of founders make is they'll put, a 40 megabyte pitch deck with like 8 paragraphs detailing the whole history of the company. Investors don't want to read that. They want something short and sweet. Notice the subject line. Jeff, can you introduce me to target investor name? This is what we're doing. We're raising a seed round. We have 2/3 of it committed, right? That's really exciting. I like the subject line because you want to put in whatever's like the most exciting, sexy part about your business should go in to the subject line. Then, hey, good chatting with you, Jeff. Mentioned I'm raising a seed round. This is what we do. We make this investor management platform. Here's a link to our website. A lot of people don't, remember to include a link to their website. Then they ask, could you introduce me to Clint? He invests in our space. And then I noticed this guy went to the same very small college my dad went to, so I included that in here just to personalize a little bit. And then I include a link to our deck. And our deck, we have it on our pitch deck hosting on Foundersuite, of course. And this is for a couple of reasons. This is, for one, to kind of qualify Clint. I want him to look at our deck, and if he says, this is not a fit for me, this is too early, I'd rather him kind of opt out up front rather than, wasting my time, setting up a meeting, driving down to meet with them, all that stuff. So it's a way of qualifying Clint. It's also, a way to kind of pre-market your deal a little bit. So in this deck, this is not our full deck. This is like a teaser deck. So it would be like problem, solution, market, team, and traction, right? So problem, solution, market, team, and traction. Just a very simple, high-level 5 or 6 slides that I'm sending in advance of a meeting so he can kind of get a feel for what we're doing. And I can track and see, of course, in Foundersuite, if he looked at my deck or not. And so this is pretty powerful. And then all Jeff has to do is click forward, send. He can send this off, and he can send out 5 or 10 intro emails really, really easy. Making it easy for your connectors to do their job, super critical. All right, we are in hustle mode now. If you haven't watched HBO Silicon Valley Season 1, I strongly recommend you do. It's great. It's hilarious. Richard's the CEO of Pied Piper. He's an introvert. He's an engineer. He just wants to be writing compression algorithms, but instead he's got to get out there and meet all these investors. And these investors are all really smart. 40% of VCs went to Stanford or Harvard. A lot of them have big egos. This guy's hilarious on the show. And investing is what they do all day long, every day of their life. Whereas for Richard, this is his first time. So it's going to be very stressful. The only way you can kind of overcome that stress is to make it kind of like a game and really get out there and channel your inner hustler and make it kind of fun. You'll learn a lot about your business by going through this process. So, enjoy that aspect of it. And of course, these are all pictures of meetings. A lot of this is now shifting into Zoom meetings these days. Hopefully that's a temporary thing, but we'll see. All right, we are in full-on hustle mode, so let's talk about some hustle tips. Number 1 is doing the introductions in parallel, asking your connectors to make the introductions all around the same time frame. I call this the Blitzkrieg approach. And really what we're trying to do is get momentum going for your deal. A corny little joke I say is like when you walk in an investor's office, there's a meter above the door that goes off if you have momentum or if you don't have momentum, right? It's like a detector. Every time you have a pitch meeting, investors will say, so, how's your round coming together? That's their way of probing, does this have momentum or not? And to the extent you can answer that with, we just started fundraising. We're running a pretty efficient process using Foundersuite, of course. I know the market's a little soft right now, but we're aiming to close this out by the middle of June. I've got 10 meetings this week, and I've got 12 next week, and our pipeline's looking really full. That's signaling right there that you're a professional, you're running a process, that other investors are interested because you've got meetings, right? And as you progress, those meetings now start to talk about like diligence. We're in diligence with 4 investors. That's just a signal that other investors are interested. Every investor is motivated by fear of missing out, fear and greed. So the more you can signal that you've got momentum, the better. And it's your job, as I mentioned. Key thing is to get momentum going for your deal. Momentum builds on itself, right? Once you start to get momentum going, it actually builds on it. And, I keep coming back to this market. It's going to be harder in this market. Investors right now are kind of hunkering down and triaging their current companies, so maybe you wait a little bit on that. Or if you're running out of money in 3 months, you've got to do it now. But again, your job is to get momentum. Yeah, let's see. We have a question. It is being recorded. Yes, I'll send this around. Okay, let's if you don't mind saving questions to the end, unless it's something urgent. But absolutely. So, we're pretty getting towards the end here. You want to be constantly improving your pitch. When I was fundraising, by the time I actually got a term sheet, I was on version number 42 of my pitch deck. And my thing, I would go out and pitch a couple investors each day, come back, put my kids to bed, crack open a beer, and spend an hour improving my slides, right? And it just gets better and better. I'm a solo founder, but if you have a co-founder, bring him or her along and have her write down every question that the investor asks, and then go back and make a slide in the appendix to answer that question. Keep your regular deck short and sweet, but feel free to add a bunch to the appendix. And then leveraging VCs off each other. We kind of talked about this already, but again, so much is driven by momentum. I know one founder that would actually go into a VC meeting and he would say, hey, I've got a hard stop at 12:45 because I have a 1 o'clock with benchmark, right? He would actually signal who else he was talking to. That's kind of brazen. I don't know if I would do that, but investors do want to know that others are interested. Last but not least, send out a regular investor update, a monthly company update to everyone in your funnel who has not told you no. Everyone you're talking to should be getting a monthly update from you. And there's a couple of reasons for that. One, it's showing you're a good communicator. Every investor has put money into a deal and then never heard from that founder again until the company is almost out of money, and they hate that. Number two is you're showing that you can execute. Even in a tough market, you're showing you can execute. You're sending a monthly update showing you can execute. And number three, I'm going to show you a quick little product thing here. Number three is think of it like marketing. It's really just investor marketing in advance of your deal. So if you can even start sending an update a couple months in advance of fundraising, that's great, right? Because investors invest in lines, not dots, right? They want to get to know you. They want to see a couple touch points from you in advance of writing a check. And this is something I just had a demo or a call with Founders Network yesterday for about 50 startups. And one of the strongest things I'm telling them to do right now in this market is to get into the habit of, sending an update to investors that they want to raise money from, 6 months down the line. Reach out to every investor in advance with something like, hey, I'm not raising money right now. I know it's challenging conditions, but I'm going to be in Q3 or Q3 or Q4. You, Mr. Investor, are right in our sweet spot. I've been following you. I like your portfolio companies. May I have your permission? May I have your permission to add you to my distribution list to give you an early peek at what we're doing? Investors love that early peek, sneak peek. And most investors, again, they're afraid of missing out on a good deal. They'll say, sure, you can add me to your distribution list. And so you start sending them an update, in advance to build that relationship. And just a couple quick points, include a little overview about what your business does. Talk about your key wins, right? What's the biggest milestones you hit in the last month or last 2 months that you can include here? We launched a product, so maybe have a screenshot, show some of your metrics. And then looking ahead, what are you going to be focusing on the next month that you can then come back and report on in the next update, right? You're creating this virtuous cycle of, I'm telling you what we're going to do, then I go out and execute, and then I come back and report on that. And then last but not least, include a team photo. You're connecting the dots between, I'm going to answer a couple of those questions towards the end if you don't mind holding. But you're putting this photo in because you're connecting the dots between a big vision, a company that's making progress, and the people behind it, right? This is just, again, marketing 101. Because, investors invest in people, so putting a team shot in every single update is really key. And notice there's no challenges, there's no how you can help. This is a marketing version of my investor update. Overview, key wins, any products or PR, any positive stuff that's gone on, put it in here and send it out. I'll just tackle this question for a minute. How do you respond to the current chorus of firms saying we're only looking at our existing portfolio companies and new investment dollars are frozen? Listen, hold that thought, because I do want to talk about this exact market environment. Let me get through. We're almost done with this talk, and then we'll talk about specifics to this market, if you guys don't mind. Okay. So the investor update is your secret weapon. Not many founders do it. It will set you apart from 95% of the other startups out there if you do it. And just know this is all going to be, even a good market, fundraising is incredibly stressful. I was waking up in the middle of the night, 2 or 3 nights a week when I was in due diligence. I thought I was getting an ulcer halfway through it. I asked my dad, who's a doctor, for some medicine. I took this prescription to the pharmacy. They're like, oh, it's $200 for ulcer medicine. I'm like, okay, I'll just suffer through. I didn't get an ulcer, but that's how stressful it is. A couple more hacks. We did some retargeting ads in Facebook, just so one of my angels said every time he logged into Facebook, he saw Foundersuite, and he wrote us a $70,000 check. So maybe there's some correlation there. You're just staying top of mind, right? The investor updates, some retargeting ads, and if you can get any press or PR during your fundraising, that's great. You're just staying top of mind with investors who are seeing, 30 deals a week, right? You're trying to rise above the noise. We have a pitch deck hosting tool, so use that. You can track and see which investors are actually looking at your deck. I'm going to spend 5 seconds to show you that because it's actually pretty relevant. I know this is a long talk. I'm trying to make it as fast as possible. Back to the investor updates, you can actually track and see who's looking at your updates. So if you're sending this to 200 investors on your distribution list, and 100 of them are looking at your update, and 20 of them are spending 3 minutes or more, those are really your buyers, right? Those are the interested buyers. Same with pitch deck. You can send this out and track and see who's actually looking at it. So pretty useful. Maybe Facebook can help you map those connection paths. I'm not going to go into detail there. AngelList could be used to fill out a round. Typically not good to start a round, but if you've got 2/3 of the round already committed. Angel groups. There are hundreds of these all over the world, all over the country. Typically, you apply. The advantages, you can get in front of 50 angels at once. The disadvantages, it usually takes a couple months. And then equity crowdfunding. If you have your own audience, if you have a built-in audience you can bring to equity crowdfunding, I think it makes sense. Or if you have some really clever consumer product, it can often make sense. For a typical, software company, it's not going to be too effective in my experience. I'm going to send you these slides, so I'm not going to go into this too detailed, but if you don't have a lead investor, what do you do? Basically, the hack here is you collect conditional commitments from lots of people. Everyone you talk to is saying, all right, what amount could you commit to, and what are your conditions for committing that? And you do that, if you're raising $1 million, you do that until you get maybe $1.2 million or 1.3 in conditional commitments. Then you go back to everyone saying, wow, that went faster than I expected. We're actually oversubscribed. Here are the terms. Do you want in or out? And, that oversubscribe actually shifts people from being conditional commitments to actual investors. Okay, guys, we're almost done. I know this is a long talk. but a couple tips on closing your round. You've been out there fundraising for a couple months now. You're sick of the rejection. You want to get back to your business. But a few tips for just closing down. Every time you have a pitch meeting, don't walk out of the room until you actually ask them, hey, it was so great meeting with you today. I'd love to hear, what's your interest level? What's your typical check size? And what are next steps? And then just stop talking. Shut up. And usually you'll get a response like, oh, we'll talk about your deal at our Monday partners meeting, a pretty generic response. But if you get a response that includes a next step, that's a really strong buying signal. Number 2 here, actually make them pitch you. This is going to take a little more bravado in today's market, but that's the job of being a CEO. Again, you're in a pitch meeting. Say something like this. It was really great talking with you and sharing, my vision for Foundersuite. I'd love to hear how you, help your portfolio companies, and I would love to hear how you specifically would help Foundersuite. And then again, stop talking and make them actually pitch you a little bit. And the reason this works is that every investor has lost out on a competitive deal where there are more investors trying to get in than there were seats at the cap table. And so what you're doing is you're signaling that maybe they're going to have to actually compete to get into your deal. And this, this will happen as you start to get momentum going. You'll have more of that leverage. But once investors get a sniff of that, a whiff of that they might have to compete to get into your deal, it makes them go crazy. I've seen investors get really aggressive and move on your timeline once you've kind of got that momentum. Okay. It can take multiple pitch meetings. I say 3 to 6 here, probably even add another couple meetings to that in today's environment. Of course, the more term sheets you get, the more leverage you have. Follow up frequently. My rule of thumb is, I follow up like 2 or 3 times to an investor, and if I don't hear from them, I kind of move on. I actually have a column in my Foundersuite that is called no response. A lot of investors will just ghost you as a way of saying no. That is a no. If an investor stops responding to you, that is a no. Oops, sorry. Let me clear the filters. Anyway, I have a no column. Sorry, weird. I have a no column and then a no response column. So when someone ghosts me, I just move them in here. And when someone says, I like you, but you're too early, I move them into revisit for Series A column. Getting some weird flickering. And then when someone does say yes, do this Paul Graham handshake deal protocol. And what this means is, you're out for coffee with an angel. They say, I like it. Put me down for 50K. All you do is go back to your computer afterwards, say, hey, write them an email. Hey, so great. I need to take out the coffee meetings, right? Because anyway, you're on a Zoom call with an investor. They say, put me down for 50K. After your Zoom meeting, you go back and say, hey, really great having a Zoom chat with you. Just to confirm you're in for 50K, please just write back with that. And if they write back saying, yes, I'm in for 50K, you can move them into the committed column. If they don't do that, they're still just a prospect and should be treated as such. Last but not least, if you're going to go down the fundraising path, don't stop until the money's in the bank. I've seen many founders go out, hustling. They get kind of tired of the rejection after a month, and they get pulled back by their customers, and they sort of take their foot off the gas pedal, and the thing slows down and stalls out, and they think they had a round done, but the whole thing collapses. So if you're going to do this, make sure you see it over the finish line. It's going to be harder in this market, which we're going to talk about in just a second, and start thinking of your fundraising related questions. But don't let up until, how do you know an investor says yes? It's when their check clears or their wire crosses your bank, right? It's true. I've seen investors pull term sheets at the last minute. This market could be a reason or an excuse for them to pull term sheets. So, keep hustling until those wires cross your bank account. This is just the beginning. You've got, you raised some money in this environment. I would love to hear about it. I'd love to celebrate that success with you, especially if you've used our platform. but just even to congratulate you, that buys you 18 months of runway or 12 months of runway. That means you need to start fundraising again 6 months from now. It means you need to start building your funnel of next round investors 6 months from now. It means you need to start sending investor updates to that funnel, well in advance. So get out there. Almost done, guys, I promise. This is a different code. But anyway, obviously check out our site. You're already on the site. We have this great blog that's really good. And then our podcast, we have a Facebook group that's not very active, about 1 or 2 posts a week. Check that out, apply to it. But then this podcast, if you haven't been on our podcast, we've got about 150 interviews with founders who have raised capital. It's just a deep dive into like how they raise money. We've got people from all walks of life, all races, creeds, colors, all over the world, all different types of industries. So lots of really good, interesting tactics and strategies on the podcast. So definitely check that out. And of course, you can always reach me at any time. All right, let's take some questions in the chat room if you guys don't mind. Okay, so I'm going to talk about viewer 30's question. So let's talk about the current market right now. The current market is, pardon my French, it's fucked. It's crazy. It's could get uglier before it gets better. My VC had like an emergency call with all the portfolio companies, kind of saying things are going to get rough. I think for the next few weeks, VCs in particular are going to be focused on like working on their portfolio companies and making sure they are stable, right, before they start looking at new deals. Okay, that's just the reality. Things are going to be so I probably would not initiate a funding round like today. I would probably wait a little bit. And so what happens after things kind of stabilize a little bit? Well, there's a couple scenarios. VCs are still going to be investing. I'm actually going to flip over to something really quick. I wrote this last week. So if you go to just blog.foundersuite.com, I wrote this article, Raising Capital in a Turbulent Market, which kind of summarizes most of my thoughts here. It's going to be either a frozen market for a little while or a really slow market as VCs are distracted, as investors are distracted by what's going on. However, this is also a potentially really exciting opportunity. I want to put a positive spin on this. Investors have a record amount of money right now. VCs raise a fund. They've got to put that money to work over a certain time frame. So they can't just like hold off indefinitely on investing. They actually have to start putting money into startups, right? And there's a record amount of capital held by investors. Number two, a lot of funds like lowercase capital invested throughout the 2008 financial recession, and they made outsized returns, and other VCs know that, right? So there's a huge opportunity for investors to become home run, investors by investing in the downturn. So they are still going to be doing some deals. Number three, like I just had a call yesterday with this Founders Network, and a couple people, their angels had been through markets before, and they were not, shaken as much, and they had just written them a new check. So even angels are writing checks. Now, the level of angels to invest is going to vary by angel, of course, because some people might have lost so much money in the stock market, they just want to totally pull out of investing. Others lost so much money in the stock market, they're looking at private companies, to investing, because that's more of a longer term investment play. And then, last but not least, like it's hard to realize this when you're in the middle of a recession or a downturn, because you're just kind of focused on keeping the ship afloat. But there is a huge list of amazing companies that were formed in the last, Airbnb, Stripe, Square, like the list is super long. I can send you a list that were formed in the last downturn. So it can be actually pretty powerful. And then give me just 1 minute, and then I'm going to get back to the questions. What can you do now, right? You can't change this market. No matter what you do, you're not going to change how the market is. All you can do is change what's under your control. As I mentioned, increasing the size of your funnel is pretty important. Dial it up by 50 to 100%. Start pre-marketing your deal, right? Sending that investor update religiously once a month to everyone in the funnel. Focus on building out your network, right? So much of fundraising runs on introductions in the network. So spend the time to get to know other founders, to possibly expand your advisory board, right? This will help you either today or when the market actually does thaw and deals start happening again. If you've taken this time for the next couple of months to expand this, then you'll be ready when the market turns back. And the markets always come back. I've been through 3 recessions. The markets always come back. So it's what you do during this downtime that can really set you apart, okay? And then last but not least, spend the time to hone your pitch deck. I review a lot of pitch decks for our customers, and 80% of the pitch decks I see are a C- at best. Like very few startups actually have a killer pitch. So spend some time improving your pitch, right? These are 4 things you can focus on and do today. You can take action that will set you up for success when the fundraising market improves. Okay, let me hit some of your questions. Yeah, I mean, things are going to get rescheduled. Just know that. Just keep hanging in there and working and getting ready. If someone says you're too early, are they politely saying no, or are they really saying you're too early? It's a great question, because saying you're too early is like how do I put this? The confrontation avoiding way of saying no by many investors. I would assume it's a no, but I would probably keep those people on your newsletter distribution list, okay? There's a difference between like a hard no and someone that says you're too early. A hard no, they're just not interested. You're not going to turn them around. Just cross them off your list. But people who say too early, it's still probably a no, but for the benefit of doubt, keep them on your distribution list, and maybe your next round, ping them, okay? Oh, this is a great question. Will we be able to raise money without physically meeting the VC angels? It's a brilliant question. So, as I mentioned, investing in startups is a human relationship game. And, without shaking hands with someone, how do you make that human connection? It's a good question. I don't have an answer. I know with our round, which was done in a normal time, there are 3 of our 10 angel investors I have never physically met. So that was without, all this crazy shit that's happening. I have never physically met 3 of my investors out of my 10 angels. So it is possible. I think as it goes on, we don't know how long this whole thing is going to continue. I think attitudes will shift, and it will become more normal to only meet people on Zoom who still write a check. So I don't have a hard answer. I mean, all I can do is be hopeful and know that some investors do write checks without a physical meeting. So it's a good question. Can I download this video? I'll send you a link to this video afterwards. I know there's a ton of stuff in here. It's kind of almost too long to be in one session. So I will send this video later. How do investors look at startups taking in grants and loans to stay afloat? Listen, investors are really smart. They know what's going on. Many investors, probably most investors, have been founders themselves, right? I don't have exact stats, but I'd say at least 80% of investors were founders previously. And they know what it's like. So you've got to do what you got to do to stay afloat. I would not if you have like crippling debt, they might look at that and be a little bit unnerved by that. I mean, grants are great, right? If you can get grants, go for that. If you can lean on customers to pay up front, if that's possible in this market, even if you've got to give deeper discounts, that's another way. So I think investors are going to be open to pretty much any scenario that you have to do to keep the business afloat, as long as it's not like crippling debt that's going to make it too hard to do your deal. These are good questions, guys. Any more? This is good. Sharing word on the street. We have learned a startup who had no choice but to cut its valuation in half because they are desperate to close. Some sharks are smelling blood in the water and taking advantage of the unprecedented. Yeah, this is the reality for time being. I think investors will use the current market to slice and dice valuations. So if you had a high valuation or inflated valuation previously, I would not assume you're going to be able to maintain that. It also partly depends on the investor. I mean, a lot of good investors have a very long-term horizon, and they know that if they are predatory during a downturn, that will come back to bite them when times are good, right? So, but at the same time, I think you can just expect valuations to compress and get sliced all over the place. All right, viewer number 26. You still have to go through the sales process when you raise through equity crowdfunding. Any glaring nuances while using Foundersuite might change in the process? Maybe slight change in the process? I'm not really sure I understand the question. Like using Foundersuite while crowdfunding? Is that the concept? Not really sure. Okay, let's go to Lee. I'll come back to that. What do you do with a VC board member who is not making intros and also is not putting money in your round? Nudge them a little bit and then move on. Again, I'll use myself as an example. Of our 10 angels and 1 VC, about 3 or 4 of my angels are active and supported. About 4. I'll call 4 of them are active and supported. Another 2 are paying attention, and another couple are totally just checked out or not interested. So, you don't know what's going on with that board member either. Maybe if he's lost faith in the business, you don't want him making intros, right? If he's just preoccupied with his own life, then maybe that's it. But I would probably just move on. Can we get a template or see the investor follow-up email again? Yeah, I'll send around these slides. So I'm happy to do that. Was it in the slide or was it in the investor update template? I can send that actually in the slides as well. Nuances about using Fundraising during crowdfunding. I mean, if you're going to run a crowdfunding campaign, a lot of those sites will have their own like tools and systems for managing all the investors. So I'm not sure if you would use Fundraising at the same time. Of course, I'd love it if you did, but I don't really have a good advice on that. All right. Yeah, crowdfunding topic. Common misconception is we'll get on WeFunder, investors will start pouring in. You still have to generate leads, refer them to your crowdfunding page. Yeah, actually, I didn't go deep into crowdfunding because I was kind of running out of time, but I strongly believe that for 90% of crowdfunding platforms, you basically have to bring your own investors. Even I think they're doing a great job, but like Republic is an interesting crowdfunding platform. I mean, I've had conversations with them. You basically have to kind of bring your own network. I think crowdfunding sites are good if you can bring your own investor network or own investors, or maybe already have like 2/3 of the round filled out. We raised a little bit of money on AngelList back in the day, like $100K or something like that, but it was only after we had like most of the round committed. I think that's pretty typical of crowdfunding sites. Any advice on generating PR as a pre-revenue company to inspire investor interest? Yeah, I'm not a PR expert. I mean, obviously looking at what's really unique and different about your company, or maybe if your company is not, that different or unique, are you doing something different and unique in this market environment, right? That could be an interesting story. I think we're going to see lots of stories about like clever ways startups are navigating the current market. So that could be interesting for journalists. We've had a few articles published here and there, but I'm really not great at PR, so I can't give you too much advice. And of course, create your own PR, right? Put out your own materials, articles, blog posts, guest blog posts, guest podcasts, all that good stuff. Yeah, if I'm not sure how to connect. If Rachel and viewer number 37 want to both email me, Nathan at Foundersuite, I can connect you guys. I don't think this platform has any way to connect. So this is a lot of content, guys. I hope your mood is okay. I know it's a tricky time right now. Hopefully I've given you some food for thought in how to execute a efficient fundraise, and hopefully, honestly, I say this and I believe it, that this is an opportunity. It doesn't feel like it in the middle of a storm, but the startups that don't fit, let me take a step back. A lot of your competitors, here's why it's an opportunity. A lot of your competitors right now are going to be paralyzed with fear. Some of your competitors are probably going to be going out of business. If you can stay focused, stay bold, stay moving ahead, building relationships with founders and investors during this time, you're going to come out ahead. So, view number 47, this versus Zoom. I use Zoom for like smaller meetings. I like this one because you don't have to download anything. So it's okay. It's okay. All right, guys, I think I'm out of breath. I've been talking for an hour and 17 minutes. Thank you so much for everyone who joined. I'll be sending around the slides and the deck. Good luck with your fundraising. Have a good weekend, everyone. Stay safe, stay sane. Reach out to me if I can be of assistance, even if it's anything related to fundraising. Thanks, guys. Over and out.